I find that in India, there's almost no discussion on passives and ETFs. And we are going to change that today.
And I think it's a very attractive opportunity. The problem is that people end up investing without understanding the entire risk of investing in any geography. So idea was to allow Indian investors to take exposure into Chinese economy. When it comes to AI, competition to US AI companies can only come from China. The next major economy is China.
Hello and welcome to the Thefynprint. We are joined today by Siddharth Srivastava, who is fund manager and head ETF products at Mirae Asset Mutual Fund. Welcome, Siddharth.
Thank you, Neil.
I find that in India, there's almost no discussion on passives and ETFs. And we are going to change that today. And especially there is no discussion on the overseas ETFs that we have so many of and who have done such interesting things. So we're going to talk about a very, very less known ETF today, which is an overseas ETF. And that is the one tracking the HS Tech, the Hong Kong Tech Index. So Mirae launched this way back in December of 21. And the timing was interesting because what followed in China thereafter was a lot of issues that led to that ETF, Chinese tech companies sort of coming down.
Correct.
And then there was a big revival. So that if you can just tell us more about this particular ETF.
So as far as timing is mentioned, at that point in time, launching international products were allowed. So we launched FANG, S&P 500 Top 50. And obviously, when you cover US markets, the next major economy is China. So idea was to allow Indian investors to take exposure into Chinese economy. And we feel that what better than to take exposure in companies which are disrupting economies, disrupting industries. So when you look at Hang Seng TECH Index, it consists of Chinese tech companies, both on the soft tech side as well as the hard tech side. So you have companies which are dominant on digital platforms like Alibaba, Meituan, Tencent, Kuaishou, etc. And now you have companies which are dominant on the hard tech side also, like Xiaomi, Lenovo, SMIC. And through one product, we can give exposure to like multiple branches within the tech ecosystem.
Right. So I think Indian listeners will be more familiar with the hard tech side maybe because of Xiaomi and our phones come from there. But people would have heard names like Alibaba. But if you could just spend a little time on distinguishing these two areas of technology.
I think people would have also heard of BYD. Now we have showrooms here in India. Baidu not only is a major search engine, but it is also a very prominent player in autonomous vehicles.
Yes.
Right. So that is one of the fantastic parts about China tech ecosystem, that you will see major players getting revenue from multiple streams, if I can say that. If Alibaba is not just e-commerce, right? Tencent is not just again e-commerce player. WeChat, etc. is so dominant. So if I name few companies, I think people must be aware about, like I mentioned, Baidu, Alibaba, Tencent, Meituan, Kuaishou, then Lenovo, Xiaomi. Interestingly, I think people will be more pleased to know that now there are 3 pure play AI companies also which are forming part of the portfolio. So a broad breakup will be roughly 50% of digital platforms, like I mentioned, Alibaba, etc. Then 30% of companies which are into client-facing tech systems like.
And when you say digital platforms like e-commerce,
not just e-commerce, I'm like, when you think about e-commerce, you only think about, let's say, Flipkart. But if you look at their business models, Alibaba has a cloud delivery platform also. They are doing so well on AI also. Baidu, like I mentioned, is into autonomous vehicles, gaming. WeChat is so famous. That's WhatsApp of China. And then, like I mentioned, on the consumer-facing tech side, you have Lenovo, Xiaomi. Then there are good number of EV companies also, BYD, NIO, etc. And now with listings taking place and with AI becoming more prominent, you're also seeing, like I mentioned, 3 AI companies, which are also forming part of the portfolio. And then you have a couple of semiconductors also, like SMIC, which is one of the largest semiconductor foundries. So it's a well diversified. So when people look at Hang Seng Tech, they should not compare it with, let's say, Nifty IT.
Yeah.
Because here, most of the revenue stream is focused on outsourcing,
Yeah,
etc. But when you look at Hang Seng Tech, it is more equivalent to, let's say, tech companies which are forming part of Nasdaq or FANG. Because if you look at Google or Amazon, Amazon is not just e-commerce company; it has the leadership position when it comes to cloud. So similar sort of parallel should be drawn with Hang Seng Tech companies also. They are leaders in China.
Yeah.
And they're doing so well not only domestically but globally also. Geopolitical things
Yeah,
apart,
of course.
in terms of lot of things related to tech.
Yeah. I mean, some compare it to Nasdaq, call it Nasdaq of the East.
Correct. It is bit of an oversimplification because when you look at Nasdaq,
Yeah.
it has a non-tech component also, a reasonable non-tech component also.
Yeah.
But when you look at Hang Seng Tech, it is pure tech. Even I think when you look at, so one can say that EV companies are not pure tech.
Yeah.
But when you look at cars with BYD etc. are doing, you have good amount of automation in those vehicles also, and the tech ecosystem is so ahead of the curve that I don't think it would be wrong to call them a tech company more than a car company.
Yeah. No, I had Swanand Kedkar recently from Takeout Capital, and he said that many of today's cars are basically iPads on wheels.
Absolutely.
Now, I think the compelling reason to look at HS Tech now is actually valuations, because if you look at the past, 4-year returns or even past 1-year returns, they haven't been that good. I'm pointing to 4 years because you launched it 4 years ago,
Yeah.
and there the return is almost nothing. It's flat.
Correct.
Because right after you launched, there was a big dive in
Correct.
Chinese stocks. The last 1 year also has seen another correction after a revival in 25. So, can you tell me a bit about the valuations of these companies versus, say, US tech?
So when you look at Nasdaq, that valuation is roughly around 24. If I'm looking at 12-month forward PE, if you look at even S&P 500, that valuation is roughly around 20. If I'm looking at semiconductor index, there is one globally. That valuation is roughly around 40. So high valuations. But having said that, and we'll probably talk about it more later, those have been justified by earnings which we are seeing globally. So while in India earnings have not been fantastic and we have been struggling on that front, earnings have been fantastic when it comes to, especially when it comes to tech, US as a whole, etc. Hang Seng Tech has, I think, 12-month forward P is roughly around 18-19. So it is definitely trading at a discount at when compared to, let's say, Nasdaq
Or even Nifty for that matter.
or even Nifty for that matter. But see, when you invest in China, you should simply just not look at valuations because there are multiple factors, right? One is a huge opportunity set which Chinese companies have, and that's a plus point, right? When it comes to AI, competition to US AI companies can only come from China.
Yeah. We all saw what happened with DeepSeek.
Correct. When it comes to EV, we already know that BYD right now is overtook
Dominates,
Tesla also,
yeah.
right? When it comes to what Tencent and Alibaba is doing, people already are aware about it. So that is there, and also the fact that all these companies will also be impacted by the domestic consumption pattern, right? And that has been subdued in past few years, right? We know about the real estate crisis which is going on, concerns around, like I mentioned, deflation, concern around obviously high level of unemployment which is there. So my point is that opportunity set is huge, valuations are attractive, but there are geopolitical issues, there are concerns on, like I mentioned, domestic consumption. There is obviously focus of government on hard tech more. So whether that aligns with your portfolio or not, you should also see that. So it is very important to consider all that and then invest. So I really like the portfolio, and I think it's a very attractive opportunity. The problem is that people end up investing without understanding the entire risk of investing in any geography.
Sure.
Right? When you invest in a PSU company in India, it gets impacted by government policies, right?
Yes.
Similarly, when you're investing in US, it also gets impacted by what the president and what the government is
Yes.
doing.
Yes.
So just focus on that. So it is attractive from a valuation point of view, but your investment should only happen after you understand the risk profile of the market.
Of course. Now, finally, let's address one area that people have concerns around is around China, which is the route to invest in Chinese companies. So many of them have entities which are, I believe, indirect routes, as in it's not straightforward to invest for say US investors who want to invest in China. So what route do you adopt when with this fund? How do you invest in these
So we basically invest directly in underlying securities which are listed in Hong Kong. So we manage ETF. So ETF invest directly in underlying stocks, and then we also have a fund of fund on Hang Seng TECH which invests in this ETF itself. Interestingly enough, we also have products on global electric vehicle and autonomous vehicles fund of fund. There we are investing in China EV segment, and we are doing that by buying an ETF which is listed in Hong Kong.
I see.
So the point which I'm trying to make is that because direct investments are closed, people can use broking platforms, etc., and I guess through your platform also to invest probably directly into the ETFs which are listed in Hong Kong or anywhere else which are providing that particular exposure.
Yeah, so this is the lesser known part because many people go through US ADRs, which is fine, but then you're subjecting yourself to a third country risk. We are going through a third country into another country.
But then also expenses pile up
Yes.
if you're doing that, because if you are directly investing, you are in a way exposed to one layer of expense. If you're investing through, let's say, a fund which is there in US and that is taking exposure in ETF which is there in Hong Kong, then you're obviously building a multiple layer of expenses also.
Correct. So yeah, so I think Indian investors should note that because of the RBI limit on mutual fund industry, Mirae is not able to create fresh units of this ETF. So you only have the LRS route, and you can very much directly hold stocks and ETFs, including this one in Hong Kong,
Correct.
if you wish. So okay, so that's that about HS Tech.